Hi, this is Joseph. It is September 22nd. It's Tuesday. And in this video, I'm going to review a very particular trading strategy that I use to day trade the Forex majors. And I use the point and figure. Obviously, you're looking at my point and figure chart. This is a particular trade setup that I posted in the Facebook group shortly after the market opened, the London session, I should say. And there was a trade here and a breakout to the upside. So I received a question. It was a private message. First of all, I'd like to say that if you have any questions about any of the trading strategies that I'm talking about, explaining, you want to know a little bit more, go ahead and send me a private message. It's the quickest way. Obviously, during the London or the New York session, I'm going to be a little bit slower in replying. But if you have any questions, send me a private message through Facebook, and I'd be more than happy to help you answer your questions, perhaps even make a video to review the particular strategy that I'm talking about. So that's what I received today, was a question about this particular setup. And they wanted to know how, the individual wanted to know how I was using both the point and figure and the candlestick charts to coordinate the trade and to know that I was actually trading in the right direction. So again, in the Facebook group, you can see my post and the image. There was the setup, the entry, the first target, the second target. One thing I'd like to say about the targets. When I post the first target and the second target, I recommend, if you're just starting off and you're learning some of these strategies, scale out, meaning that you're going to find one target and then the second target. Based on the information on the point and figure chart, very often I can determine where the target is, the actual target, which is usually the second target. But again, if you're trying to become familiar with the techniques and you're still not really comfortable, you haven't, created that level of confidence so that you can execute without having to worry about the trade and changing the dynamics, changing, the stop loss or where you take profits, I recommend scaling out. So we talk about that in the coaching program. I teach this strategy. I have a step-by-step diagram on how to use the point and figure, correlate the confirmation with the candlestick charts to find these trades. That's what you want to do. When you're using a point and figure chart, you're either using the bar chart or you're using candlestick patterns, candlestick charts to confirm what you see. Because what we're looking for very often, whether it's a reversal or a consolidation phase, we're looking to find a turning point or a breakout point. And that's why we need to correlate the two charts, the two different types of charts, the bar chart or the candlestick chart, along with the point and figure. So I'm going to review here what I did this morning and how I was able to find this turning point here. This move to the downside was just prior to the London Open. And then after the London Open, and very often we see this. So I can't say that this happens every single day. I just watch the London Open, the first hour, watch how price moves. Sometimes there's a move before the London Open, the London market opens. And then sometimes it'll go flat, and then the reaction, like we saw yesterday, it'll actually occur, or some kind of big move will occur during the first hour. Each day it's a little bit different, but you want to be paying attention. You want to be taking notes and identify what's going on during the first hour of each trading session. So I do the same thing with the New York session. I don't usually trade the Asian session, but very often there are opportunities. The Asian session is typically when I sleep. Gotta sleep. I'm not a machine. I wish I was. I wish I could trade around the clock, but it doesn't work that way. So that is usually when I sleep, is the Asian session, because it's typically quiet, usually, at least for the trading methods that I use. So again, there was a move to the downside, and I really didn't participate in it. I suspected that it was likely to turn around, but I want to show you there's obviously several different methods. Some people will use real simple indicators that will identify some kind of divergence at the bottom of the chart where you see price making new lows, but the indicator may not. And sometimes that's enough to get away with some of the trades. But very often they'll fail. And if you can't identify if it's likely to reverse and come back down where the trend would continue to the downside, you could get stuck on the wrong side of the trade and lose quickly. So again, right around the London Open, very often we see this type of behavior. We see a move that sort of baits or tricks the market, tricks traders into going in one direction, and then it'll turn around. Again, make notes yourself, watch the London Open, watch the New York Open, and watch how often that actually happens. So again, one of the ways that I identify whether or not it's going to turn around, this is the pound futures. This isn't the pound dollar, this is pound futures, and I'm looking at actual volume. This is real volume based on the number of contracts that are traded within a 1 hour time frame. So I'm not looking at tick volume. Tick volume will give you different results, like with the tick volume indicator with the MT4 platform. This is not the MT4 platform. I need to see futures and volume to identify what's really taking place here. And last week we had this pretty significant low. It created a couple of different opportunities for us to trade last week. And today, this morning at the London Open, it actually created an opportunity here. So this candle right here that you see where I'm moving my cursor, that red candle that dipped down and printed 28,331, the volume levels, that was the highest candle on that 1 hour. That was the highest volume since the previous week. I mean, we can go all the way back here, and last Friday it didn't even print that high. It was the strongest candle to the downside, attempting to take out that support low. And this is where I was able to see that there was a move to the downside that didn't cover much of a distance. So there's a couple of things that you want to be paying attention to when you're watching these price swings at key support or resistance levels. The same thing can happen with these up thrusts here. We traded this last week. We were able to identify that it was reaching an area of resistance, and these moves through resistance, there was a lot of volume, and volume was picking back up, but it wasn't much of a reward for the effort that was made in the attempt to the upside. So again, it can look like a trap. I apologize for that. You can't see that. I'm talking about this particular level right here. So again, I had to tighten up the chart. I just had it right out of the screen and I noticed that. So this is the level of resistance from last week. This is what I was talking about with these short up thrusts. And you can see that there's volume picking back up, attempting to break to the upside, but there isn't very much distance covered. So there's a lot of effort and very little reward or return on the moves to the upside, trying to push price through. And this is what I'm talking about when I say bait. It's a trap. People will tend to go long because they're not paying attention. They may be looking at a simple indicator down at the bottom, and it's not giving them the right information that they need. And then we were able to participate in this move to the downside, and we ended up with about 95 pips, I think, trading this to the downside. I believe that's what it was. There's a video in the Facebook group. I apologize for not knowing the exact numbers here on this one. So again, watch the video on the Facebook or on the YouTube channel, and you can see this trade right here. It paid quite a bit. I believe it was about 95 to 100 pips on this move to the downside. So the same thing happened, but just in the opposite direction. So now I'm going to open up the charts here, one click, so you can see where we're going with this. So let's go back to that candle this morning. So again, this is the London Open. Now, it attempted to cover a little further as far as the number of pips from the low than it did here to the upside last week. But nevertheless, there still was a very poor close as it started to roll right back up and attempted to close above that support level. And this was our turning point. Again, the strong amount of volume to the downside. It didn't close very far away from support, and it was all taking place at the London Open. And then we had this reversal candle right here, the bullish reversal candle, a strong volume candle. And it continued right through. This location right here at this low is the same location right here on my point and figure chart. Now, there are a couple of different levels that we can get into the trade. I'm a much more conservative trader when it comes to trading off of point and figure. And my entry was at 1.2769. My target, if we're scaling out, is going to be the 2800. And then the final target here, based on the count on the point and figure chart, was the 1.2820 level. So this paid approximately 50 pips from the entry to that final target right there. It all started with being aware of the start of the London session. Very often with approaching support or resistance, we're going to see, or we could likely see, some kind of a reversal or fake that baits traders into the direction that it's moving in, and then it flips around and reverses. And some of the keys are paying attention to how far it's trying to move based on support or resistance, as we noticed right back up here on from last week, as it was making these little attempts to break out to the upside, but really wasn't covering very far. It wasn't covering a distance that would really justify any strong move to the upside. The same thing was taking place down here at the London Open this morning. Basically the same pattern. It did move a little bit lower, but you can see this massive amount of volume, and the whole thing turned around and went right back up the opposite direction. And the confirmation was also in the the bullish candle, as volume level started to pick right back up again. Notice that candle right there, that bullish candle, the reversal candle, and the volume levels. We didn't see anything like that since last Thursday of last week. Today was Tuesday. So again, it really all comes together at the same time. There's much more detail involved, but I do have checklists that will walk you through step by step each one of these trades so that you're not getting stuck on the wrong side of these trades and these head fakes. You can carefully, step by step, look at each one of these trades and know that you're going to trade it in the right direction, and you can earn 50 pips. This all took place and paid relatively quick. I think it all took about 30 minutes from the entry until it actually hit its final target up there for a total of 50 pips. Again, all of this information in a step-by-step detail on how to trade this is in my traders course. If you have any questions about the information that I share in this video, please send me a private message or drop your comment just below the video. Or if you have any questions about my traders course, again, you can make a comment just below this video or send me a private message.